All right, let's do something a little different today. We're going to put on our detective hats and dive into a stock market mystery. We're going to look at all the technical clues for one single company, Opendoor, ticker symbol OPEN.
So our whole investigation kicks off with this one number. On this day, Opendoor Technologies just explodes higher, up over 6%. Now, a move like that, it gets your attention, right? And it makes you ask a really big question.
You see that number? And for a lot of people, the first thought is just pure excitement. Is this thing about to launch? Is this the beginning of a huge run-up? But, every good investigator, every good trader knows you have to look at the other side of the coin. Could this big jump actually be a warning sign? Is it a burst of flame right before it burns out? That's the real mystery we're trying to solve here. The only way we're going to get an answer is to get our hands dirty and dig into the data. We're going to follow the trail of clues the stock has left behind in its trading history and see where it leads. So, let's get started. Okay, first things first, we need to establish the basics. Which way has the stock been heading overall? Before we can understand this one-day pop, we have to know its general direction of travel. And to do that, we use a tool called the moving average. The easiest way to think about it is this. It just smooths out all the daily up and down noise. It's like looking at a map of a car's general path over a long road trip. Instead of focusing on every single little turn it made, it just shows you the bigger picture, the main trend. And wow, the evidence here is pretty compelling. The stock's price at $8.48 is floating above its average price for the short, medium, and long term. This is our first major clue, and it's pointing straight up. The stock is in a clear, undeniable uptrend. So we've established the direction is up. Now the next question is, how much gas is in the tank? How much force is actually behind this move? It's time to measure the momentum. For this job, we pull out a tool called the MACD. Now, don't let the complicated name fool you. The idea is actually pretty simple. It just looks at two different moving averages to see if the trend is getting stronger or weaker. You can just think of it as our speedometer. And what's our speedometer telling us? Well, the data shows something called a bullish crossover. All that means is that not only is the stock moving up, but the speed of that upward move is actually increasing. Someone's pressing down on the accelerator. And if you needed any more proof of that acceleration, look at this. This number is the stock's rate of change over the last 14 days. It's up more than 24% in just 2 weeks. This isn't some gentle, lazy drift higher. This is a powerful move, and it confirms that momentum is really strong right now. Okay, so we've got a clear direction and we've got some serious speed. But is this a solo mission or is the crowd on board? In the market, we need to know if other investors are buying into this story. And we figure that out by looking at trading volume. You can think of high volume like a packed stadium roaring for their team. It gives the move strength and conviction. Low volume is like an empty stadium. It makes you wonder if the move is really legit. And let me tell you, the crowd is definitely here for this one. This chart shows us that the recent trading volume is almost double its 20-day average. A massive number of shares are flying back and forth. This is a huge clue that the market, the crowd, is firmly behind this uptrend. So, the case seems pretty open and shut, doesn't it? Uptrend, strong momentum, big crowd. But any good detective knows that sometimes the most obvious cases have a twist you don't see coming. It's time to look for evidence that goes against our theory. Let's just recap the case for the bulls. The price is way above its moving averages, momentum indicators are flashing green, and trading volume is through the roof. The case for this stock to keep rallying looks almost airtight. And this is the point in the investigation where you have to take a step back and just ask, is this too good to be true? Is there some piece of the puzzle here that just doesn't quite fit? And as it turns out, there is. And that missing piece is called overbought. It's a condition where a stock has just gone up too much, too fast. Think of it like a marathon runner who sprints the first mile. Yeah, they're way out in front, but they can't keep that pace up. A pause or even a reversal is probably coming. And all of a sudden, the warning lights are flashing all over the dashboard. First, the price has actually pushed outside of its upper Bollinger Band. That's like our runner veering completely off the track. Next, an indicator called the stock RSI is at 100. That is literally its maximum possible reading, screaming overbought. And finally, another indicator, the CCI, is also flashing a major warning. Our suspect, who was moving nice and steady, has suddenly broken into an all-out, unsustainable sprint. So here's where we are. This is the whole case in a nutshell. On one side, you've got the bull case, a beautiful trend, positive momentum, big volume, all those clues we found at the start. But on the other side, you have some really serious risks. Multiple signals screaming overbought, a very low risk to reward ratio, which kind of suggests the easy gains might be over, and another indicator even says the underlying trend is weak. Our simple case just got a whole lot more complicated.
So, with all this conflicting evidence sitting here on the table, we need to put the pieces together and come to some kind of conclusion. What does the professional analysis say when you weigh both sides?
This quote from the source analysis just nails it, doesn't it? It captures that conflict perfectly. Yes, there are bullish signals for the short and medium term. But, and what's a really big but, these overbought signs are a huge red flag that you just can't ignore. Okay, so let's file the final report. The arguments for this trend to keep going on are real. They're based on price and momentum. But the reasons to be cautious are just as real, pointing to a really high chance of the stock just chopping around for a bit or even pulling back. So what's the verdict? There's some potential here for sure, but it comes with a lot of risk and a need to be really, really careful. And with that, our investigation is closed. We've followed the evidence, we looked at the clues, for and against, and we've seen how complex things can be behind just one big green number. All the evidence is right here on the table. So now, it's your turn. What do you see?